What's up guys, Raymond here with another video, and I just wanted to take this time to apologize for the long break I've had between the last video and now. But without further ado, I'm going to start the second part of our German stock analysis. So this is all part of a series of all of these videos are part of the financial statement analysis group that I've made on my YouTube channel, and as indicative of the title, is where we analyze financial statements. The top three being the balance sheet, the income statement, and the cash flow statement of a stock. And by doing this, we select and analyze particular aspects of each statement to be able to determine whether or not the company has a strong future and whether or not the company is financially healthy. So without further ado, I'm going to start the German material sector. The first stock in this section of our financial statement analysis series is called Aurubis. And yes, without further ado, let's get into it. So what we do is we look at the key ratios, that being the market cap being the first one. So this company has a 2.85 billion euro market cap and revenue figure of 16.3 billion euros, which is quite a disparity. So we're going to quickly see if we can find out why there's a massive gap between the market cap being the price of the company and all of its outstanding shares, and the amount of money i.e. sales that the company produces per year. So I assume that the company has decreased its value, i.e. the market price, significantly during the last year. Let's just check. So 22%, which doesn't really explain why there's such a big gap. I mean, 16 billion euros compared to a 2.85 billion euro market cap is almost like a 600% difference. So we're going to quickly try and figure out why there's such a massive gap. Judging by the income statement, I can see that the income for the last 3 financial years is quite low. So maybe that's why. So yes, I assume that's the reason why the net income for the last 3 financial years has been extremely low compared to the revenue figure. So I'm guessing the general market won't value the stock at so fair a price, considering that the revenue figure, the amount of profit made compared to the revenue figure is quite a low ratio. So we're going to get into the dividend yield, that being 2.52%, which is quite a lot lower than we expect, or quite a lot lower than the minimum that we would like, which is about 5%. So the PE ratio is 4.46. That is just the price to earnings, that being the price of the stock, i.e. 64 euros compared to the earnings per share. Earnings per share being 14.23 euros. So I would say that is that's actually quite a decent percentage. It's almost 20%. So I would definitely say that it's good for this current financial year. The beta, that being the risk level of the market price fluctuation for the last financial, or for the current period, is 1.08, which is about 8% more than the market average, which is not too bad considering that the current economic situation is not the best and we expect high volatility in stocks. We're going to get into the first statement, which is the income statement, which suggests that the total revenue for the last 2021 financial year was 16.3 billion euros, as we saw earlier. And the balance sheet shows that the current assets were 2.94 billion euros. The total assets were 4.53 billion euros. The current liabilities were 1.2 billion euros. Total liabilities were 1.94 billion euros. And the total equity, which is the shareholders' equity, was in total 2.6 billion euros. So if we compare the total equity with the market price, so the total equity, just in a nutshell, is the debts, the liabilities plus the assets. So whatever the company owes, with whatever the company has in assets, and that is the total net worth of the company. So if you were to sell everything the company has, what you would be left with is around would be around 2.6 billion euros. So we're gonna quickly go back into the market cap. The market price is 2.885 billion euros, and compare that to the total equity of 2.6 billion euros. We're left with goodwill of 2.5 billion. Sorry, 3.5. Sorry, 0.35 billion euros. So around 350 million euros, which is actually quite amazing, considering that most market prices are quite a lot higher than the total equity. So this is what Benjamin Graham will call a net-to-net investment, which means, well, it won't quite meet the net investment criteria, but it's very close. So net investment is the total equity compared to the market price. If it's exactly the same, then you're technically not paying you're not paying an overinflated price. You're not paying extra for nothing, or you're not paying for future earnings anyway. You're getting everything for its exact asset value. So we're going to get into the last statement. Sorry, the balance sheet. Actually, we didn't go into the balance sheet. As we can see immediately with the graphs, the total debt or liabilities is less than half of the assets over the past 3 financial years. We're going to trying to get into the exact figures. So the total current assets were 4.6 billion euros. The total assets were 6.61 billion euros. And the total current liabilities were 1.93 billion euros. Total liabilities, as we saw earlier. And the total equity for the 2021 financial year was 3.44 billion euros. And if we check the market cap again at 2.85 billion euros, we'll realize that we're actually getting a surplus of around I think it's just about 500 million euros. Correct me if I'm wrong. I think it's about 590 million euros that will be getting essentially for free if you were to buy the entire company. Of course, there's some other factors that need to be factored in, but that in a nutshell is what we've just seen. So we're going to get into the cash flow statement, which shows you how the company manages its cash from operating activities, from investing activities, and from financing activities. So the net income is the starting line, 825 million euros that it made in 2021. And the cash from operating activities was 812 million euros, and the cash from investing activities was negative. It usually is negative because that shows you what the company spent on investing activities, i.e. capital expenditures and investing from cash flows. So the cash from financing activities is also usually negative, I believe, from what I've seen in the past. And because it usually shows what the company has paid out in dividends and what the company has done with its debt, whether it's reduced the debt or whether it's increased the debt. And as you can see here, the company has reduced the debt by 18.94 million euros. And it's reduced its outstanding stock, so it's bought back some stock worth 8.94 million euros, and it's reduced its debt amounts by 4.25 million euros, which is not a substantial amount considering the company's size. Also, the dividends paid was 56 million euros, which is not a lot either. As we saw earlier, the dividend yield is 2.52%, which is quite low. But as you can see here, what we're trying to figure out is how the company manages its cash, whether it reinvests its cash, how much it reinvests, and how good the company is at getting a decent return on investment, i.e. 5% or low, 5% or higher per year. So the net change in cash for the 2021 financial year was 484 million compared to the current market price. That's about 20%, which is decent. Let's check if it's consistent. 2020 financial year, 39 million euros, and a negative of 37 million euros in 2019. But as you can see, as the years progress, the company is increasing its net change in cash. Let's just see, hopefully in the 2022 financial year, the current financial year, by the end, we'll see what the company's spent money on and how it's done with its cash flow. Usually companies don't follow a regular pattern. They usually find something to spend their money on, whether they after they've built up a substantial amount of cash over a few years. But we'll see what the company spends money on, if it does at all. Usually, the largest cap companies that do very well in the long term, the market leaders like Apple, Microsoft, Google, they usually have a high amount of cash saved. They do manage to spend a large amount of cash, but in proportion, the amount that they spend is not a lot compared to how much they save. So hopefully this company will follow, and all other companies that we analyze follow the same patterns, because it seems to be something that helps investors to have a lot of faith in the company, or to build faith in the company, and also prevents a lot of issues like a lot of risks, liquidity risk, liquidity risk, operating risk, and etc. So that is the last financial statement we're looking at, and let's just check if there are any other pieces of information we need to go over. I don't believe there is. I don't believe there are. But without further ado, I'm going to close this video. Thank you guys for watching, and I will see you in the next one.